Welcome back. Well, investors are currently facing a wave of unpredictability with share prices swinging more dramatically than usual.
Yeah, from AI volatility to the latest conflict in the Middle East, mum and dad investors are on edge out there. But is it time to panic or do you just hold tight? Today, money expert Joel Gibson joins us again. Joel.
Hey, Jolie.
I mean, it's always fluctuating, we know that, but is this a particularly tough time for investors?
It has been, because we've just had the February results season and we've seen bigger swings, bigger jumps and bigger drops in share prices off the back of their results than we're used to seeing. And now, of course, there's a war, layered on top of that. So look at some of these share price drops just in the day after they announced their results in the last month. 18%, 17%, 15%. These are all ASX stocks. And also, we saw some stunning successes as well, where they went up by 27, 13 or 13%. But that is really quite nerve-wracking if you're a mum and dad investor and you've got, a significant amount of money in directly invested in individual stocks, and you're seeing those sorts of movements the day after results. So it is quite hard at the moment.
We sometimes see these results are an indicator of that particular point in time, and then they can bounce back. Do you predict that's likely to happen anytime soon? I mean, we don't know how long this war is going to rage for in the Middle East.
Yeah, the war is one question. What's happening with those results ones is something slightly different. Like a lot of things at the moment, it's AI. There are these global trading firms that are using AI to immediately analyse the tone of ASX releases the second they come out, and then being really super quick to trade and try and make quick money out of those stocks. And that's causing volatility. But what you will see, we gave you 6 examples there, 3 of those examples bounced back to where they were before the results announcement in the days afterwards. So a lot of them have returned to normal. The war, of course, adds another layer of confusion. But the thing is, I asked, Stake, one of the investing platforms, to look at if you'd invested $1,000 10 years ago, what would have been the best places to put your money? And these are the stocks that came out on top. All, as you can see, on the US markets.
Tech related.
If you're investing in NVIDIA 10 years ago, you're a time traveller.
Exactly right. But what I did notice, if you look at the graphs of these share prices over the 10 years, they've had plenty of big drops in individual days, right?
Yeah.
Over time, if you invest in the right themes and the right stocks, over time, and you're patient and you don't panic when there's a one-day drop, you can get these sorts of returns. But if you're constantly selling every time something drops, have a look at this. This is how long the market took to recover in the US after these significant global events, which caused significant drops in the S&P 500. 5%, 34%, 25%. And yet, again, after days or weeks or months, it returned to where it was and kept heading north. So history suggests if you're patient and you don't panic, you will do well over time. Obviously, if you're a day trader, you're looking at hourly and kind of, by the minute data. But mum and dad investors, it's about picking the themes and that you want to invest in, and sort of walking away from it and being very patient and don't panic.
All right.
All right, Joel.
Thank you very
much.